Hello once again, everybody. This is Rich with High Percent Trading. Today we're going to go over the four U.S. equity indexes trade setups. This is Thursday, March 1st, 2018. First, I'm going to show the setups here with respect to what the Oracle was projecting for each day in the equities, and I'm going to start with the YM contract, the Dow contract. The daily trend for the day was up, and that's designated by this dark blue band down here. This was the projected buy area today in the Dow. This was the projected sell area today in the Dow. And for a lot of you who have been following this, we'll trade both sides of these bands when they break out as well. We don't care what the trend is for the day when it comes to bands being broken out. Okay, so this is showing the Dow early on. It was just kind of moving sideways for quite a while as we were starting to move into the European session. I'm going to move a little bit forward in time because the YM has a lot of bars that it trades, but suffice it to say it never did get down to its projected buy area as of 7 a.m. Pacific time. However, it did rally up to its projected sell area, and I believe that hit it to the tick today. All right, came right up to its projected sell area, hit it to the tick. If you've been following this, you'll know that this was a manual trade setup, first time in, and some of the traders that trade this actually got this short here this morning. So this was the Dow, and it hit pretty much the projected sell area to the tick. Now, I don't believe it ever did revisit that again. We started to move sideways again, but again, some of the traders holding shorts from up there. And then we came down to our projected buy area today. This is around 9:30. Had a nice little bounce out of here, a little tradable bounce. And then we broke. All right. And again, what's important is you trade both sides of these bands. As we broke through it, our bars were red, the profit was red, and this was a sell-off that started around 10 a.m. Pacific this morning. Now, as a lot of you know, the Dow was down, I think, about 460 and change today. And again, what did I want to show here is even though the projected daily trend was up today, there are news events, things that happen in the world, economic developments that cause these markets to not do what's predicted, and good traders will learn to take advantage of that. And one of the things that we teach and show using this indicator, the Oracle, is to trade the bands, the upper band and the lower band, both sides. And the rule is we have to have red bars and or a red profit. We break through. This band is only 10 ticks, so relatively speaking, the risk on any given trade in here on the short side was about $60 per contract, with slippage. And you could see the big sell-off. Now, I'm not going to go through the whole chart here, but you can see it just continued to sell off. If traders held runners in here, the sell-off was very significant today in the Dow. Okay, and then we ended up significantly lower today. Let me go ahead and put up another contract so we can go through our indexes today. This is the NASDAQ from today, and just like the Dow, the projected daily trend was up, and it had some nice long trades earlier in the day. I'm not going to show those right now because what's important, what I wanted again to show is the breakout. So As we came down here around 9:50 Pacific time, we started to we were trading through the projected low for the day, the buy area. And as you can see, as we broke through here, um, our bars eventually turned red, and then as we rallied back up to the band, again, that was the short entry through the band, back to the downside, and just like the Dow, the NASDAQ never really looked back today. We never did come back to our projected buy area. So in order to be a complete trader, you need to be able to take advantage and don't get stuck only looking one direction or get stuck only looking to take trades in one direction when world events or economic news swings these markets the other way. This is a good example of being flexible in your trading. Let's see. Let's take a look at the ES, the S&P 500 mini. All right, here's our ES, our E-mini S&P. Again, coming into the trading session this morning, Thursday, our projected daily trend was up. And you can see early on, the E-mini S&P came right down to its projected buy area and bounced right back up to the gold band. A little bit later on, after the pit open, we had another super setup as it came back down to the buy area again, bounced and came fairly close to its projected daily high. Now, unlike the Dow, which hit its projected daily high sell area, the E-mini missed it by a couple of handles. Okay, and then later on, as we moved, we attempted one more time down back into the projected buy area. Bounce up here of about 4 or 5 handles, and then we broke. Just like the other markets, once we break for a reason. You want to get on the other side of that. And again, really nice trade coming through here. You had some retrace opportunities, but the initial trade, which is always the most profitable when it does the break like this, ran a considerable distance down here. In fact, the move was from 26.96, say 50, down to 59 or 60. That's about 36 handles times 4 ticks is what, about 120 ticks at 1250 tick. That's a big move. So again, the equities were very volatile today. I'm going to show the Russell. Expect them to be equally volatile again tomorrow when we have large moves like this, and the Dow being down 300, 400, 500 points. The volatility is not going to go away. We're going to have it again tomorrow. We're going to be cycling up and down, and these levels are going to be really important again tomorrow. So the reason I say this, we made an invitation into our live markets analysis room on our workshops to show this live. Try to attend if you can. I'll put the links back up here for you to try to copy and paste and bring in if you haven't done it, okay? So bear with me and let me pull up the Russell. All right, now here's the Russell. Now, the Russell was the only one of the 4 indexes going into today where our projected daily trend was down. And it initially had a very hard time just rallying above the gold band. And this provided some very nice short trade entries early on for traders who were trading this market in the early hours or the European session. This was our projected buy area today. We came right down to it within a couple of ticks and bounced right back up to the gold band. Later on, after the pits were open, we did the same thing. We came right back down to it again on our projected buy area and bounced up. And this time it was trying to make a run to try to get to the projected daily high. But unlike the Dow, which made it, and the S&P that came very close, This one had a little more room to go, and I believe part of that was the fact that our daily trend was down, so there was more selling pressure on the Russell, at least initially. Okay. Well, I take it back. We got a little bit higher, so we got closer, but not there. All right, and then we broke. As we came back through the gold band again, that's a sell setup that I've talked about. If you're not familiar with that, please try to join us in the room. And then we broke. But unlike the other equities that we showed here, the break was not very severe. It amounted to some movement, but not much. And then, and this is the really good thing about this is, remember we trade both sides of these bands. When we came back up through here and we had blue bars and or the blue profit, that's actually a long entry. So we went above our projected daily buy area, right back up to the gold area, and this is where we kind of went out right here. Okay, and that's the Russell. Now I've gone ahead and put up the link for tomorrow's live markets analysis room. If you don't have it already, it's going to start at 6:20 Pacific, going to 8 a.m. and then we do have a workshop after that. So if you attend the room tomorrow, we'll give you the workshop invite as well. This is the registration link. I don't know if you're going to be able to copy this off of here or not. If not, you'll just have to type it out. This is the website, high%trading.com, that you can go to. You can request a free trial of these indicators if you haven't. You can contact us if you're interested in becoming a member. In addition to having these really fantastic indicators that you'll see in action, you'll be able to attend our live markets analysis room every day, 5 days a week, plus the workshop. So if you were to go to the website, this is what it looks like. You can come in here, you can request the free trial, you can contact us, but again, try to attend our live markets analysis tomorrow. If you don't already have the invite, some of you may not, and you'll see this in action again tomorrow. You'll see the volatility in the markets, and you'll see the real importance of these levels. So again, thanks for watching. I hope this was helpful, and we hope to see you in our rooms in the near future. So thanks for watching, everybody, and please enjoy the rest of the day or evening or morning, whatever the case may be, depending on where you're at in the world. Bye for now. Bye-bye.